It's Sunday afternoon. I am looking out over a beautiful sunny golf course from my office, and I'm wondering if we're going to see some beautiful sunshine in the world of crypto. And yeah, I thought we'd check back and have a look at the diamond pattern that we were talking about last time round, and I thought we would zoom out and look at a longer term chart and see if there's any if there's any indicators that say that possibly we've hit a bottom in this current trend. And I also got a couple of words of caution as to the strength of what we've broken out of the diamond clearly, but I've got some words of caution about the strength of it just because of a couple of things that are happening in the world at the moment. So just to recap very quickly, what we've done is we've trended down into this kind of this diamond ECG zone. We've had a little heart rate blip and flatlined, and then we broke into the upside, as is traditional with diamond patterns. When you've headed down into them, and we started to push out. We haven't pushed out with any strength. What we can see at the moment is we can see that the volume is rolling off slowly, and this generally is when we start to see something big happen. We're also at the top of we're heading, I say that we're in the, we're kind of 59.60 in the RSI, so we've got movement both ways. My gut feeling is that we don't have enough strength in this move. However, my technical feeling is to go with the TA, and sometimes it takes a little bit of time for a move to confirm itself. So yeah, we've come into this pattern and we're looking for something to make us feel a little bit more certain that it's going to play out. So what we've done is we've looked at I have a number of ETH charts, and I tend to use them for a couple of months. I'll do my short-term technical analysis on them, and then I'll use them for a longer term analysis. And they serve as quite a good notepad and a memory jogger. It's really good to have an idea of what's happened previously, what patterns have happened previously, what events have caused what reaction in the market, and just having a quick zoom back on a macro scale really does kind of jog your memory as to what has gone before. So I've got this chart here, and it's a year long. If we make this smaller and kind of scale it down a little bit so we can see it properly, and what we can see is so this is January last year, 2021. This is our diamond pattern area. This was our diamond top with Ethereum when it first peaked out at just over 4.5 grand. And what we can see is that we're kind of trending in this range. We're trending up, down, up, and we've come back down again to retest this support level. Now we've tested it 4 times, and here, and here, and we're going to look for some similarities in what happened on those occasions. So first and foremost, we've got the area that we're in at the moment. I have to make this bigger so you can see it. So we've got this ECG diamond pattern blip, and we're starting to push up. Whether we're going to continue up, whether we're going to go up and bounce off of this 200-day at 3,000 and get rejected and come back down and retest it and maybe go back up and form a W pattern, that could happen. you know, something major could happen in the news. You know, Bitcoin could be adopted by Turkey, and you know, we could just go absolutely ballistic and fly straight through all the resistances above us. It doesn't feel like the world is in that sort of place at the moment, so don't hold your breath for that one. Yeah, that's kind of where we're at the moment. We're just keeping an eye on this diamond pattern. And back here in the last couple of attempts to bounce off of it, we have this. I always tend to manipulate the chart to see, you know, to really give myself the best chance of seeing a pattern. So you know, if you've got it on a daily, you might not see what you would see on a you know, a 4 hourly or an hourly chart. And again, you've got to look over the kind of days. This is a 4 hour chart, and we've gone 17th of July, 16th of July out to 21st. So kind of, you know, 4 or 5 days. It doesn't look like a big pattern on this, but again, you know, the more you zoom in, you can lose it as well if you zoom in too much. But you could see possibly we've kind of come down into this. We've hovered, we've blipped up. We've got our little ECG blip, and then we've pushed out of it again. And again here we've kind of come down. We've hovered. We've got our little ECG blip, and then we've pushed out again. And then finally, and I don't actually think this first one really looks much like, yeah, it doesn't look much the same, other than to say that we've just got a sharp drop down into it. Yeah, we've got a kind of sharp run down into it, and then we've had a little bit of a recovery, and then we've pushed back down, and then we've come back up, and we've hovered, and then we've broken out of it, albeit not with any, you know, not with any great strength, but we've had a steady uptrend after it. So I guess that's kind of what we're looking at the moment. Are we seeing similarities? I know looking for similarities in you know, in previous market patterns isn't great, but that's, you know, that's where TA comes from. It, you know, people have done hundreds, well, not hundreds, but, you know, 50, 60 years worth of research. They've gone back over 50 or 60 years worth of recorded trends, and, you know, worked out what the likelihood of them breaking up or breaking down is. And so yeah, we got these kind of three reversal areas where you could argue, you know, there's a similar trend. You know, there's that definite really sharp fall before it pushes back up again. I'd say actually what we're looking at the moment is probably the clearest diamond pattern that I've seen for a while. But, and there are a couple of big buts, and so I'm going to go back to our original diamond chart. And if you've seen some of my other videos, you'll know that what I tend to believe is that the technical analysis is very accurate, and that big news stories tend to come out at very key points, you know, decision making points, in you know, in the patterns that form. So at the point where you could break up to the upside, you'll get Tesla selling. You know, they've announced that they've sold all their Bitcoin. You know, when you're in a descending wedge, and you should bullishly break out of it, or you could potentially bullishly break out of it. You'll get a big piece of news that pushes the market down, or you'll get a big piece of news when you're expecting to break down that kind of pushes people, you know, pushes the market in the opposite direction. there's a couple of things that are kind of happening at the moment on chain data wise. You could look at the shorts and the funding rates, and the funding rates are negative at the moment, which means that predominantly it's really expensive to take out a long perpetual position because the majority of the market is betting the opposite way. And when the majority of the market bets the opposite way, the whales do like to come out and swallow them all up. Yeah, that's a possibility. That negative rate is actually it is actually quite, if you were going to throw the whale analogy out of the window, the negative funding rate is actually very well supported at the moment by the fact that the whales are moving their Bitcoin onto the exchanges, and the reason you move your Bitcoin onto an exchange is to sell it. And I guess the other two things that are happening is obviously the stock markets are all over the place at the moment. Traditional stock markets are all over the place at the moment. The S&P 500 had a bit of a recovery on Friday before close of business, and it's pumped up, and it's just literally resting on a strong resistance level, and we're going to see when the markets open tomorrow whether it's going to pump straight through it and push back up again, or whether it's going to get a strong rejection, and that will have an effect on the crypto market. The other thing that will have an effect on all markets, although if you actually look into the reality of why, aside from gas, is the fact that Russia are amassing over 100,000 troops on the border of Ukraine at the moment, and if they choose to invade Ukraine, then we could find ourselves with a market correction which is related to a catastrophic event. So those are the things that are making me wary at the moment. I haven't got any money behind this breakout. It hasn't got enough volume behind it. That doesn't mean it won't follow through, but it's very possible that we come down and we have another retest of the kind of $2,000 level, or we wick down below and hit some of my buy-in targets, because I don't have any buy-in targets up here. If it pushes up, I'm going to miss out. I'm going to wind up buying back in at a higher rate, but I'd rather do that than sit here and watch the value of my watch and miss an opportunity to accumulate more without actually adding any cash money in. And that's really what I'm about. I've made my initial investment, and what I want to do is I want to sell when the market's high, and I want to leave all the money in, and I want to buy double back when the market goes low. That's my kind of that's my strategy. And you're never going to pick the very top, you're never going to pick the very bottom, but you can get reasonably close. So, and let's face it, if you're up and you sell out at a profit and you buy back in at less than you've sold for, you're always going to win, and that's as simple as it needs to be, isn't it? Sell high, buy low. And so let's just sit back and wait and see what happens with this pattern. I think that's all I've got for you. Not financial advice. This is just for my own personal fun, and it's a video trading diary for myself, just to understand why I've done what I've done when I've done it, and what the thought process is, and what my entry points and exit points are going to be,